Hey guys, it's Steven. If you are overwhelmed by too many indicators or too many setups or a lot of noise at the open and you're trying to trade the open, today what I'm going to do is show you a clean setup and a clean structure that provides a straightforward trade setup at or near the open. It starts with two simple lines and one candle, right? So super simple setup, super simple to understand. But what most traders miss is that the important part of trading the open is not about being fast and speed. It's about being precise in your trading. So let me show you how this trade sets up. First, if you didn't know, you can click here on the lower right for extended trading hours. And this yellow portion is the pre-market. So regular trading here in the black, pre-market is here in the yellow. And all I'm going to do is mark the high and the pre-market low. So these are the extreme price points that happened before the open at 9:30 Eastern time. During the regular trading hours, these two prices are going to act as magnets near the open. Price is going to be tested at these areas, move around them, and possibly reverse right at these areas. But here's the problem. Most traders ignore these price levels completely and end up walking into a trap that was very obvious if you pay attention to these levels and mark them before the open. Now I'm going to move this a little bit so we can see the setup more clearly. Once I have these lines in place, I'm done guessing about entry. I'm simply waiting for price to approach one of these lines after the open. I'm not trying to trade everything in the middle of the range. I'm waiting for these real decision points, these pivot points to come into play. This is what gives the trade structure and clarity without having to rely on a ton of indicators to overwhelm your trading at the open. You're not reacting, you're stalking the market at this point. But here's where things get interesting. What you do at these levels makes all the difference between a clean trade and a fake out. So here's the setup. I am looking for a power bar to form at these levels. A power bar is a large bodied candle that shows conviction, either buying or selling in the market. It's going to break away from the candles around it and close at or near its high or low. I want that bar to be very obvious, not a maybe or could be a power bar, but oh, that's a power bar. I can see that very obviously. Most traders think they're seeing momentum near the open, but if you've ever chased a breakout and got stopped immediately, you know why precision matters at this point. Let's talk about the long setup first. I'm literally going to use today and yesterday as my two examples for this trade. So as price drops toward this pre-market low, this is the first power bar. This is your power bar, right? The large bodied candle that forms at or near this pre-market level. That's your buy trigger, and the trigger is above this power bar. That's the buy level above the power bar. Your stop is below that power bar. There's your stop. But here's the mistake most people make, and that's to buy before that power bar completes. Keep this trade simple and don't enter until after this power bar, which formed near the pre-market low, is complete. You don't want to trade what you hope is going to happen, but what actually is happening. Now let's flip it and look at an example of a large red power bar and how that played out yesterday. So again, we start with our pre-market action and drawing in the highs and the lows. And if you'll watch this, you're actually going to get two trades near the open with this same setup. The first thing I'm looking at is a power bar to form very near to the highs. That's where we're trading as the pre-market price was inching higher. Now, here's where we're going to get a little bit more advanced. If you're familiar with candlesticks and a small number of setups, you can add those into this trade. If you just want to trade using the power bar, you can do that as well. But here's what I see and what you'll see as you become a little bit more advanced trader. At this open, there were a lot of topping tails. You had an uptrend and now you have topping tails. That's something that tells you that the trend, the short-term trend, could possibly reverse. That's a yellow flag for going higher. You get this candle, which looks like it's going to head lower, but doesn't. That's not your power bar, right? This is the first power bar. You can either do a combo of these two together, just visualize this as one bar, or you can use this bar, which is, again, forming near that pre-market high and moving lower. This is your entry, your short entry. This is your stop. You end up with a really nice move lower. You had about 70 cents or so in your stop, and you have a shot at making basically double that on this move lower. So that's a simple trade, one and done. But what most traders miss is if you get a run down to the pre-market low, now you can get a second setup and catch this moving the other way as well. It's the exact same pattern, just in that opposite direction, right? So this was the short setup, and most traders are afraid to flip and go the other way. But you have a really nice turn here with these bottoming tails. You get 3 in a row. You get this hammer pattern. You don't have to know what that is, but a long bottoming tail with a small body near the top. This is your power bar coming off of that pre-market low. This becomes your long entry, and this is your stop. So this is your risk, and the market just takes off from there. Here's what most traders miss with this trade. The location of where the bar forms is more important than the bar itself. And that's why you have to draw these two lines, the pre-market high and the pre-market low, so you know where that location is and what you're looking for. Again, a power bar at a certain location, not just a random power bar. Another twist that comes into play, it's nice to have hesitation around that pre-market high or low. It's nice to have a topping tail. If you're near that pre-market high and we're looking for the reverse, it's nice to have bottoming tails. If you're looking for a reversal off the pre-market low. What this tells you is this area is being evaluated by traders. And as that power bar moves away, that is your signal to enter. Often the second or third touch of the level is more important than that first touch. You can see you have multiple touches here before the power bar develops, which is a positive that you're going to get a nice move. Often traders miss that setup. The target that you're looking for in the trade should be pretty straightforward. You want to look for a return to that pre-market low. On the buy setups, you want to look for a return to that pre-market high. You can also, as you go a little bit further into the day, use a VWAP as a target. It's not that great at the very open because it's going to be basically where your stock or ETF is trading. But as you get 60 minutes, 90 minutes into the day, you'll get a little bit better feel with VWAP, or volume weighted average price. You also want to have in mind the highs and lows from the previous day as a possible target. But the important piece of this is that it's taking away the stress that is felt by almost every single trader near the open. This setup keeps your risk small, and the logic of the trade is very clean and straightforward. This style of trading is much less stressful than trying to follow 10 different indicators at the same time near an open that's jumping all over the place. I hope this setup is helpful. I also did a cheat sheet that is free to download that walks through the trade step by step. If you like the free copy of that cheat sheet, just type stock in the comments and I'll ship that over to you. And if you found this video and setup helpful, please hit like and subscribe for my next videos on different setups. And feel free to ask any questions in the comments. I try to answer all of them if I can. Finally, there's a link to a video I did around trading off the 20 and when you need to pay attention to the pre-market versus regular market hours. And I'll put a link to that video right here on this page in this video. So if you want to check that out, it has related information about what's important pre-market versus regular market. Thanks again for watching.